Hey, ladies and gentlemen! Happy to be here again. And today I'm super humble and excited to have Alex. Alex is one of the most inspiring traders that I had the privilege to meet, and I'm so grateful for the opportunity. Alex and I met, by accident, but now I'm truly happy that he's here and we're having that podcast together. So without further ado, I like to talk when the episode and when the recording is starting, but without further ado, this time I would love to present you with Alex. So Alex, I'm happy to have you here on our show, the TradePod. How are you today?
Hi, Efek. Thanks very much. I'm very happy to be here. Appreciate
It's
the
our pleasure,
opportunity.
mate.
Yeah.
Yeah, so before we start, let us know who you are.
Well, yeah, my name is Alex. I've been trading pretty much for the last 25 years now.
Mhm.
So I already started like trading options when I was a student, and I realized that was my passion. And that's all I've been doing ever since, you know. Um, Pretty much traded European. I started with European markets. Um, I traded in Asia. Actually, I used to live in Asia for some time. Traded the Asian markets there, Nikkei, Kospi, JGB. Um, and nowadays, I'm actually focused on the American markets, which is kind of a little bit of a trend these days that many options traders just focus on the US. So I'm trading the SPX 500 options basically. So I'm on my own, so I'm not backed by anyone. I'm just kind of trading my own
Let
capital.
me ask you this. Let me ask you this. Last week I met one of the greatest option traders here in Israel, and and he told me, "Hey, I came from retail, so my background is completely retail, and accidentally I got into the industrial world, which was hard after 8 years, full of mistakes, and because when you're a retail, it's much harder to
Right.
see success. Um, so how do you manage like being a retail trader, no backed by anyone?
Well,
It's super. It's like it's not that easy, you know.
I'm probably a little bit the opposite of this guy you're talking about. I'm actually coming from the other side. Like I used to be actually a professional trader. So when I started trading in Frankfurt, I used to work for prop trading firms, and that's where I learned how to trade options professionally, right?
Mhm.
So, which means delta neutral, and mostly balancing the Greeks, delta hedging. Also, we used to provide quotes. This was the early days. You see, this is 2000. I started doing this, right? At Eurex. So back in the day, I was working at Eurex in Frankfurt, trading Eurex. So we basically provide quotes. We would quote over the phone for bigger clients, or also trading with other banks or prop firms. So that's my roots, right? It's not the retail, it's actually the professional trading environment, the roots. And kind of what I'm doing now is, I guess, it's a bit of a mix of retail trading and still keeping in mind what I learned professionally. Of course, some of the methods you can't really use if you're on your own with a small capital base, because you don't have the systems, you don't have the credit lines which you would need to do so. But so I think it's a healthy mix of some kind of retail logic and strategies, and overlaid by a professional trading concept. In a nutshell, I
Mhm.
think a pretty good summary of what I'm doing at this point.
Great. So, let me ask you this. You have mentioned that you have traded, the European markets and you have shifted to the United States markets. Um, so let me ask you this. What was the difficulties in shifting, besides session times and everything else, shifting from the European markets to the United States markets and actually being able to trade properly within this space because, you know, there's here issue of liquidity. Market makers might be different. How the US news might impact on the European markets is slightly different than the US markets. So it might be a great shift. Both sides might be e either super rewarded or super you know lack of luck. But I would like to ask you, how was your shift?
Well, the shift, it was more like a long-term shift. So my story is that I used to trade the European markets, right? Then I moved to
Hmm.
Asia and actually had full exposure to the Asian markets. I was trading the Nikkei for a few years. Kospi, JGB, which is the liquid products really to trade in Asia. There are other ones, but this is the ones I had exposure to. Um, I think that one of the reasons that I ended up with the US markets was a few years ago, I joined the community, basically like a trading community, um, and their focus was on the US markets. And I was always interested in the S&P 500 because people always used to say, if you can trade the S&P 500, you can trade anything, right? Because it's the most liquid product in the world. It's the most competitive. Obviously, everybody's there. All the market makers are there. It's pretty liquid. And my trading style now is basically position trading, right? So what I'm looking for, what I want is liquidity, right? And
Hmm.
that's definitely something I get. And when I say liquidity, I mean liquidity on the screen, right? Because there are
Hmm.
some products that have huge liquidity, but it's all traded over the phone. Now that doesn't help me because for me as a small guy, let's say, I cannot access phone liquidity, right? I don't have any access to broker markets or something. I want to have liquidity on the screen, and the S&P 500 is actually a great product for that. I mean, think about it. How many products you can trade technically? You can trade the SPY, you can trade the SPX, you can
Yeah.
trade the ES, like the futures options. You can trade the XSP. I mean, there's so many you can really trade, and most of the liquidity there is actually reflected on the screen, which is very important to me, you know. So that's how I
Hmm.
ended. So there's two reasons. One is I joined this community, which is really focused on the S&P 500, and the other one is just looking for liquidity, and that's where you kind of end up with the S&P 500,
Hmm.
if you look for this liquidity.
Yeah, of course. So how looking at the liquidity within the S&P really helps you to drive success within your day-to-day trading?
I'm trading multi-legged structures. I'm actually nowadays
Wait,
mostly
wait,
really
wait, wait, wait,
specialized.
wait, wait, wait. I have a question.
Sure.
Multi-legend structures?
Legged,
Leg
multi-legged, right?
structures.
Yeah.
What do you mean? Let's talk about that.
You, like a butterfly, for example, right? I'm actually mostly trading butterflies, right? So a butterfly has three legs, right? You buy one put and you sell two, and then you buy another one to hedge it, right? And that's called a butterfly. And of course, the more legs you have, the more essential is the liquidity, right? Because you want to have a tight market in this multi-legged structure, and that's something I can get in the S&P 500. I can get a tight market. I can even execute this if I really wanted to outside of regular trading hours. Um, yeah, I mean, it's easy for me to get into the market. It's easy for me to exit. And I can also hedge my exposure around the clock because that's what I'm doing is to keep my risks balanced. Is I hedge my risks basically with the futures, right? So ES futures, micro ES futures. That's what I'm using to offset my risk. So that's really a big um, how do you say a big argument for choosing this product.
Mhm. Yeah, yeah, completely understandable. Um, so yeah, of course, liquidity impacts the way you're trading. But let me ask you this. I would like to know how you scale trading businesses because you're a retail trader. You do not have much leverage. You're trading only minis. You might hedge, but hedging might not work. Now by accident you might face, huge downturns and so on and so forth. So I would like to ask you, how do you manage your trading businesses properly in order for them to be highly productive and highly profitable?
Sure. Okay, so when I put the trades on, first of all, I built my own like spreadsheets to analyze the markets basically in real time so I can see if it's a good time to put on one of those structures or not, right?
Hmm.
So let's say I get an alert on my spreadsheet where it says this is a good time now to put them on. I put one on and I kind of scale myself into the positions, right? So I'm not going in there with huge size. I'm going with really small size. I put it on. It's delta hedged when I put it on. So um, the risk is very balanced. I'm not taking any huge risks. And the way those strategies are structured is they have a very flat, like a T0 line, right? This is basically the payout of the structure. It's pretty flat. So so I put them on. I put some black swan hedging in place as well. That's always part of every strategy.
Hmm.
And then of course I check with my broker the margin requirements, right? So capital preservation really is the highest priority of all this, right? If you use your own funds, and I basically use what I call like retirement funds because this is my retirement plan, right? Um, I want to trade a strategy pretty much until I'm unable to do so, if you know what I mean, right? So this is it's not a high frequency strategy. I don't have to sit in front of the screen 8 hours a day. I basically put the structure on, and then I check once a day, maybe an hour before the close. How do my Greeks look? Is everything okay? What's my risk? Is one of the strategies reach the profit target? I take it off, right? Is the stop loss reached? Every strategy also has a stop loss. Um, if the stop loss is reached, I would also take it off, which luckily happens rarely, to be honest. Yeah, and that's pretty much. It's very mechanical, It's emotionless. There's no emotions. You just look, you know. The market's basically giving it to you, right? Or it's taking it away from you, and you just kind of go with the flow, right? This year wasn't easy. Don't know if you remember August 5th, for example, which was a huge test for everybody who trades my trading style. All the butterfly traders were really tested. But luckily, for me, it was actually a good test to see that my black swan hedging actually works because that was the best day I had in the whole year. It was August 5th. So, right?
Hmm. Yeah, yeah, of course. So, let me ask you this: how do you manage yourself fundamentally?
Sorry, can you repeat that?
How do you manage your business fundamentally?
Um, Fundamentally, I mean, since I'm delta neutral, I'm not speculating on the direction of the market. Okay. I don't know where the market's going to go. And quite frankly, I don't care. I actually trade volatility 100%. That's what I'm
Hmm.
trading, right? So, for example, you remember before the Trump election, right? Before the elections where Trump finally won, the VIX has spiked up. This was just one of the classic trades I usually take. The VIX had spiked up to 24, which is a huge sales signal for the VIX because it was just way too high. So I basically took the opportunity to position myself in selling some premium in the SPX at
Hmm.
24, and now it's trading at 14, right? So that's like
Hmm.
10 points in my favor. So that's really part of it. It's not that I only trade butterflies. It's I would say that's like 60-70% of the business. I also look for opportunities. If volatility is very low, I'm gonna buy some. If volatility is very high, I'm gonna sell some. It's very much mean reverting. It's one of the most mean reverting instruments on the planet is volatility. And the beauty in the SPX on the US is that you have all these indices to track it. So you can build your own spreadsheets to check in real time really what the volatility is like, and that gives you as even as a retail investor a huge advantage, to actually trade like a professional, because that's what professionals do. When volatility is really low, they're buying it. When volatility is really high, they are selling it at the
Hmm.
end. That's really the game, I know it always sounds more complicated, but in a nutshell, that is the game,
Hmm.
right?
Yeah, absolutely. Just I'm curious about how do you look at markets in terms of volatility? Because volatility is an issue. So how do you measure volatility? This is the first question. And how do you take advantage over the volatility? Because this is literally one of the most impactful topics that might turn you on or off.
Sure. Well, it's there's a lot of models out there. There's lots of theses have been written about volatility trading. At the end of the day, if the if the if the implied volatility is significantly higher than the historical volatility, you basically looking for to sell it, right? And that's what happened before the elections, which was very classic. I mean, historical volatility was about 10, and implied volatility was 24. I mean, think about it, right? So, and I sold a strangle basically a few weeks before the election results finally came out. I just sold a strangle, just capturing the spread between historical volatility and implied volatility,
Mhm.
right?
What are the differences between historic volatility and implied volatility?
Well, you can simply measure them, right? You can basically, whatever time frame you're looking at, let's say if you want to trade 30-day options, you look what was the historical volatility for the last 30 days and what is the implied volatility. And then you can calculate the spread. And
Hmm.
and if the spread is significantly high enough, then you put on the trade. Of course, you cannot predict what volatility is going to do in the future, right?
Hmm. Yeah, of
And that's where the
course.
risk management comes in. So when I trade this kind of structures, usually the risk is on the downside, right? Because when the market's going down, volatility is usually is going to go up. So that's why to manage in particular my downside risk, but of course I manage basically my 15-20% slices on my trading software I use. I can tell how much would my portfolio make if the market goes up 20% overnight, okay?
Hmm.
Volatility going up, volatility going down, and likewise on the downside. The software basically shows you what your risk is, and if it's too high, I just adjust it. You know,
Hmm.
for example, let's say my downside risk was too high, I buy a couple of downside puts, right?
Yeah.
another way of doing it is also just to buy or sell some futures, right? If I realize if the market goes down 20%, I'm losing significantly more than if the market goes up 20%, then I'm going to sell some futures, right? To balance that risk out, right? So
Hmm.
that's why I'm basically looking at a portfolio, right? I'm not looking to sell a cold spread or to sell a naked put. I'm looking at all the Greeks in the portfolio have to be balanced. Then I'm looking at the risk in each expiration, right? And once I have the risk in each expiration, then I look at the strike risk also, right? I look, do I have any big positions in a particular strike? What happens to my Greeks if the market actually moves around? What would happen if the market would go up 5% tomorrow? Is my
Hmm.
risks okay? And if they're not, I balance them out. So I basically try to anticipate um, by predicting or forecasting where the market would go and adjusting my position for that matter. So if this would actually occur, so that my risk is fine. As I said, capital preservation is just the highest issue, for me. Even sometimes that might mean I'm not gonna have the full profit I anticipated, but the capital is safe. Because as I said, for me, this is a retirement, it's a retirement strategy. It's very conservative, it's not high frequency. It's not zero DTE trading or anything risky, what I would consider risky. So
Yeah. No,
I hope
yeah,
that makes sense.
I can completely rely. Yeah, of course. Um, but I would like to ask you this. Um, looking backwards, I would like to know how do took advantage over the implied volatility within your trading? Because right now it's always easy to answer, but I would like to ask you this, like the evolution of how you took advantage over the implied volatility and how it impacted your trading.
Well, I guess it's also a lot of experience because I traded index products basically all over the world. And at the end, they're always the same. I traded the German index. I traded the
Which
Japanese index, right? The
DAX
DAX,
is
exactly. Yeah.
I don't know how friendly the DAX is.
The DAX is the opposite of the S&P 500, right? Many people compare the DAX to the Nasdaq actually, and it might be true, but it's definitely less liquid than the Nasdaq 100. Because I know I used to trade it, and I know the liquidity is not there, which gives you an advantage. Of course, if you're a market maker, right? Because then you provide quotes which I don't have the means right now to do so, right? So that's why the DAX is not really the interesting product for me to trade. But anyways, they all kind of tick the same. And you kind of get a feeling for, and they're all connected. That's another thing. If you trade Europe, to be honest, it's kind of a hybrid product. They kind of do their own little thing during German hours, but after 3 o'clock, when the US market opens, they behave like the S&P 500. The correlation, I think, goes up to 90% or something. So, but the way I extract this edge is just through spreadsheets I built, in Excel, and just charting volatility indices like the VIX. This is the whole family now. You have the VIX 1D, you have the VIX 90, the VIX 3M, VIX 6M, VIX 1 year, which is incredible that they give you all these indices which you can basically access for free. And that gives you a great idea about what the volatility surfaces are doing, you know?
Hmm.
And I'm not only looking at the money volatility, I'm also looking like what is the 10% downside put doing? What's the 10% upside call doing? And what is the relation between them, right? And if this relation is kind of out of bounds for me, then I say, okay, I'm going to sell a put and buy a call and delta hedge it, or vice versa. There's just so many little strategies you can put in place, you know.
Hmm.
So there's basically reactive. I would say it's like I'm doing two things. One is kind of no matter what, I'm putting on a trade once a week because I know the trade has a really high probability of success. Um, and then you have like an opportunistic entry, right? So the opportunistic entry is you have a big spike. You see that some panic came into the market, and let's say the 5 delta strangle suddenly trades 20% higher than it traded the day before. So that's for me a huge opportunity. And then I'm going to go in and I'm going to sell basically a strangle, you know,
Hmm.
and just because it's mean rewarding, right? I mean, you can chart the VIX for the last 20 years and you would be surprised. Of course, there are upside spikes, COVID, 2008 financial crisis. But at the end, it always reverts to the mean. And the mean in the VIX is around 16 or something. So pretty much a valid strategy is if it goes significantly above 16, you're going to sell it. And it goes significantly below 16, you're just going to buy it. It's
Yeah.
really, it is
No,
really,
this
it
is
is
this
really
is
that simple.
understandable.
Yeah.
Uh-huh.
Yeah.
So let me ask you this. Last question. I really see that you are super that you really like trading, that you really like this game, and you really believe. I really believe that this is, what fascinates you. So I would like to ask you, Alex, what is the most fascinating topics in trading to you, and why it really catches your interest that way? It might be
Um,
indexes, it might be futures, it might be anything else. But I just want to learn something unique from your experience because you have gained a lot over the years, and I would like to learn something that might be fascinating to you than all the other things that really pushes you forwards with your trading game.
I guess it's just the fascination of of an electronic exchange to start with. I mean, when my career started, the days of the open outcry markets were basically counted, right? But you also have to see that my first job was with Eurex, right? So the European exchange was, I think, is still the biggest exchange in Europe. So they're located in Frankfurt, and that was my first job. And when I was there, um, I was working at a DAX desk, so I was actually taking care of DAX options and futures, and that's where I think my fascination started with the whole. I didn't before I was started working for the exchange, I didn't know how professional trading worked, right? So when I was a student, I did directional trading. I would say, okay, I think the market's gonna go up, and I'm gonna buy some calls. Yeah, and that worked most of the time, but sometimes it didn't, and then you lost everything you put in. And I was like, wow, how can people manage the risk this way? Until I learned the delta neutral trading style, and that's where the fascination really sits, that no matter what, you can find in any given product really a strategy you can put on any given day, you know? And that is fascinating, right? You don't have to wait for some rare events to unfold to be able to put on a strategy to generate some returns. You actually don't. You can put you can put a strategy on whatever. I mean, there's so many little moving parts, which can give you the opportunity to just do that, right? I hope that makes sense, yeah, and I'm fascinated by the
Yes, yes, it is. It is.
I,
It makes absolute sense.
and I'm fascinated by the efficiency of it, right? You basically sit in front of your computer at home. You're connected to actually the exchange. There's nobody really in between. I mean, it's just a broker, but you get exchange prices, and then you can build your own sheets. At the moment, I'm actually looking to learn Python, right? That's another thing because I'm on my own. I'm a one-man shop, and I don't want to ever have a standstill. So I'm always looking to expand into new things, right? So my bread and butter strategy really is trading those option structures in the SPX. But recently I also added single stock trading. So I'm following strategies there. It's like buy and hold strategies in the stocks where I'm holding some long stocks. I also trade ETFs, like strategic and tactical portfolios. Um, yeah, and I'm also a huge fan of automating processes. That's always been my thing. And what I'm doing now is, so I built all the spreadsheets. Nobody gave them to me. I didn't hire anyone to do it. I just wanted to do it myself. I always liked Excel. I'm educating myself about Excel through courses and stuff. I'm learning how to program macros and all that stuff. And on top of that, now I see the really good thing for me, a next level thing to do is to learn how to program in Python. And since now we
Okay.
have, Python, right?
Of course,
Yeah,
we know
yeah,
Python.
yeah. And now with ChatGPT, I don't know if you realize that they actually have now actually a little side project, which is basically a full-blown Python ChatGPT. You can just tell Python what you wanted to code. And this is the really next big thing for me. I'm looking into just to monitor risk is one thing, of course, get real-time risk data, and also to scan for opportunities. There's always little things going on in the market, and you just want to be able to see them. And then when I see these opportunities, and sometimes they last for hours, for days, weeks, and months. You never know how long they're gonna last, right? You might think, oh, this is way too high now, and this was just the beginning of a trend. Of course, that happens, and you just sell it, and it goes against you, and it goes against you in the next week. That's why always also you want to stay small, right? Always be able to add to this position. If you are still confident, and if your system still tell you that this position you just put on statistically has an edge, even if it goes against me, I'm not going to get out of it if my risk parameters are still fulfilled. To the contrary, actually, I'm going to add to this position, right? I'm
Hmm.
just going to trade another one lot into it. And I might do this on a weekly basis, and that's also like, because you asked, what's the fascination? Of course, the fascination always is if the plan actually works, right? You put the position on like that, and you might have to fight it for a little bit, and eventually it goes your way. And this is of course a great reward, right? Then you were right. You might have been early, but you were actually right. And then you take the position off for a profit. Your book is clean, P&L is locked in, and you're looking for the next opportunity.
Hmm. All right. So, Alex, again, it was a pleasure talking to you. I have learned much again. So, I would love to thank you for the opportunity,
You're very
and I
welcome.
appreciate that you came on to the Trade Pod and actually, took a part of it. I think it was a miraculous experience for me and for all the relevant people that will hear this podcast because it was gold. So thank you. I really appreciate
You
it.
you're very welcome. I had a great time, you know.
Thank you.
I
Thank you.
appreciate the
Thank you.
opportunity.
I appreciate you, mate. Thank you.
Thanks.
Bye bye.
Bye.